Welcome back to the Armchair Trader podcast. And today we are going to be talking about Neil Woodford, which is a subject that many of our UK listeners will be familiar with. Many of our foreign listeners, maybe not so much. But we have on the podcast today David Ricketts, who is something of an expert on the subject, having actually written a book about Neil Woodford called When the Fund Stops, which is available now at your local bookshop or on Amazon if you don't have a local bookshop. David is the asset management correspondent at Financial News here in London, and is the first journalist we've had on the podcast. So welcome to the show, David.
Thanks very much for having me. I'm honoured to be the first journalist on your podcast.
No, it's good to have someone from the press on with a more objective outlook on what's going on in asset management. Can you give us a quick summary, because there'll be some people listening to this who are not in the UK, may not be that familiar with who Neil Woodford is. Can you just give us a quick summary of who is Neil Woodford and why he became famous and then subsequently infamous?
Yeah, absolutely. So Neil Woodford, he was arguably the most famous retail fund manager in the UK, and for very good reason. I mean, he had a good sort of 25-year career with a firm called Invesco, which he started in the late 80s. And anyone who would have put £1,000 with Woodford when he started that firm in, I think, 1988 would have had around £25,000 after his 25-year tenure. So that's a pretty good return. I think any investor would be very happy with that. So he really kind of made a name for himself, or became an overnight success during the dot-com bubble when that burst in sort of 2000. He was one of the few fund managers that wasn't really piling into technology and internet companies at the time. He received a lot of flack from financial advisors and some of his superiors actually at Invesco at the time, who were really questioning his decision not to take part in this kind of growing buzz around the tech sector. And instead, he was someone who chose to stick by some of the familiar companies he'd held in his fund for many years, including tobacco stocks and other big kind of blue chip companies that really kind of paid off during his time there. And obviously, when the dot-com crash came, Woodford was absolutely vindicated, and he achieved a sort of overnight success, if you like, and was very well rewarded for that by his bosses at Invesco, a huge sort of payout and bonuses, etc. He kind of replicated the same thing again during the financial crisis. He was someone who didn't hold any bank stocks at the time. So he managed to escape a lot of the fallout when lenders like RBS were plunged into crisis. So he was really seen as somebody who was, who managed to kind of escape all the kind of the market turmoil and had something of a Midas touch. And he earned this nickname, the Oracle of Oxford, which was kind of a reference to Henley, which is where Invesco had an office, which is where he was based, but also obviously referring to Warren Buffett, who I'm sure many of you will know is referred to as the Sage of Omaha, one of the world's most successful investors. So he did very well at Invesco. He had a great career there and amassed a huge following. I think by the time he'd left Invesco, his two funds, the high income and the income fund, I think oversaw more than 30 billion across those two funds. That was a huge chunk of Invesco's overall assets, which I think at the time were around about 75 billion or so. So he was a huge component at Invesco. He pulled in a lot of money for the firm, but he decided to strike out on his own. So in 2013, he announced to the market he was leaving to set up his own venture, Woodford Investment Management, with his business partner Craig Newman, who was somebody who worked with him at Invesco. And the expectation was a lot of these Invesco clients would follow Woodford out the door to his new outfit. And we can talk a bit about the kind of the success the fund launch had, etc. But really, he kind of struck out on his own in 2014, had a huge success initially, and then after about 3 years or so, the cracks started to emerge, given he kind of strayed away from when I said he was focusing very much on blue chip companies, he started to stray towards more liquid and unquoted companies. And that really kind of caused him great difficulties as investors wanted their money back because of performance issues and other things. And that's kind of when the downfall really started to happen, sort of 3 years after he'd set up his own venture.
If you're looking at this from an investor's point of view, he had a methodology that worked. It worked for him in 2001. It worked for him in 2008. What was it, do you think, that made him actually break from that? Because people are always saying if you're successful with something, just keep doing it. Why deviate from the path that has proved so profitable?
Yeah, that's a really good question. I think it's one I'd love to sit down and ask the man himself. But I think actually, towards at the end of his career at Invesco, there was evidence that he was starting to dabble in some of these less liquid companies. I mean, he started to make a few investments in unquoted stocks, but in unquoted companies. It wasn't really seen as much of a concern, particularly to the financial kind of commentators and the people that we speak to in the press who kind of follow Woodford and his investment process. It was kind of a very small holding, if you like. That said, it was enough to kind of get the powers that be at Invesco concerned. And actually, they did set up a committee internally to start keeping a closer watch on what Woodford was doing when it came to investing in some of these kind of smaller companies. And actually, that was something I think really that kind of pushed Woodford towards the decision to leave Invesco ultimately, because he had this really in an organization like Invesco, a big US focused firm. You will have an overbearing compliance function, where there are going to be a lot of questions asked of you, and by this point, towards the end of his career, Woodford had, as you say, demonstrated success with his investment strategy. He'd been doing it for a long time. I don't think he really liked being asked questions about, why are you investing in this company? What's your rationale for doing so? I think he thought, I'm the top dog here. I'm the guy who knows what I'm doing. Just leave me to it. So he was certainly getting a lot more questions from his superiors about some of the companies that he was investing in. But yeah, I think that the question you asked there about why change his style, speaking to people that work with him, I think it was as simple as he thought he could replicate the success that he had at Invesco and simply do the same by investing in some of these smaller companies. Now, one of the things that happened when he left Invesco to set up his own firm, there was an appetite among some of his business partners to certainly make more investments in these younger companies, these unquoted companies. He based himself in Oxford, where a lot of the kind of bioscience and biomedical companies are based. So he was very much kind of located near some of these companies that were kind of testing new ground and companies that were looking for investment. And I suppose the question that gets asked a lot is, well, what was the due diligence done on some of these investments as well? And that's a question that comes up again and again, because from people I've spoken to who work with Woodford in his new firm, there are lots of people banging on the door asking for investments. They obviously wanted to get Neil Woodford on board, and that would be a great thing for them to publicise. And the question really is, well, was there enough due diligence done on some of these companies? And did Woodford really underestimate how difficult it would be replicating the success that he had investing in those large blue chip companies? It simply wasn't transferable skill, and that's something I think he gets criticised for quite a lot. So I think it came down to simply that he thought he had the success, and it would be just a case of doing the same with some of these newer companies. And it's obviously a very different investment skill set that is needed to invest in unquoteds.
How much of his success in the retail market with private investors do you think can be attributed to media coverage, and how much can be attributed to the fact that he seems to have had a lot of traction with the wealth managers and the independent financial advisors in the UK?
Yeah, so I think that's another question I get asked a lot: is the role of the media, you like, in building up Woodford, but also kind of bring him down as well to some extent. I think if we look back to when the announcement was made that Woodford was leaving Invesco. I mean, it was a huge story at the time. I mean, it was picked up by all the financial press, and no surprise. I think Woodford was featured in the sort of personal finance pages, the weekend papers quite extensively. He was someone who was seen to deliver for investors, and he was kind of a favourite among kind of personal finance journalists. When he announced that he was setting up his own fund, so the equity income fund, which was the flagship fund, that the first fund he launched in June 2014, he managed to negotiate this exclusive fee arrangement with Hargreaves Lansdown. So it meant that Hargreaves was the cheapest platform for you to gain access to Woodford's new fund, essentially. Now there was heavy promotion around the fund's launch. It was backed by Peter Hargreaves, one of the platform founders. It was also backed by Mark Dampier, the head of investment research at Hargreaves Lansdown, and even Hargreaves Lansdown's own multi-manager funds. Those which invest in funds that are run by the managers. They were also piling into Woodford's new fund as well. So there was a lot of buy-in, if you like, from Hargreaves Lansdown. It was very heavily promoted on that platform, and it also featured very heavily on their influential Wealth 150 list. So it was given the highest prominence possible, essentially. And I think in total, Woodford's first fund, the equity income fund, raised 1.6 billion during the offer period. So it was the most successful new fund launch ever in the UK. So it gives you an indication about the appetite to get into this fund and the kind of traction that he got, even from the likes of Hargreaves Lansdown publicising it and promoting it on their own platform. In terms of the kind of media success, or the media kind of relationship, if you like, I think when things were going well, Woodford was kind of riding high, and the press were certainly giving him an easy ride. I think by sort of May 2017, which was kind of 3 years after he'd launched his new business, he was running in excess of 15 billion pounds across the whole business. Just over 10 billion of that was in the flagship equity income fund, and that kind of May 2017 period turned out to be the pinnacle of the business. I think after that point, that's when things really started to take a turn for the worse. But I think the media did certainly play a role in helping to build Woodford up, and I think actually, in some respects, we're probably a little bit guilty of not really flagging some of the concerns earlier on as well. I know that from conversations I had with people I speak to regularly for comments on various fund managers, when the cracks did start to emerge 3.5 years into his new business, it was kind of seen as, well, this is just a bump in the road. This is something that Neil Woodford will be able to get over. And those are kind of consistent messages that I was getting from kind of the market experts, if you like, I speak to. But then, having said that, there were a few journalists who were certainly probing a lot deeper than some others, myself included. And we're sort of taking a deeper look under the bonnet and sort of looking at some of the companies and the liquidity profile of some of the firms that Woodford was investing in, really kind of raising concerns that if things really do take a turn for the worst, and actually this is a fund that's really going to struggle to pay back investors. So I suppose the short answer to your question is, absolutely. The media did play a role in helping to build up Woodford, and there was a lot of excitement around his new fund launch. And I think all that kind of played into the hysteria around, we've got to get into this new fund early on, because this guy is going to shoot the lights out when he gets going.
Again, looking at that shift into sort of small cap tech stocks and biotech stocks, if you look at a successful biotech manager, and we've had one on this podcast, the impression they give is of somebody who's very well versed in life sciences markets and in the dynamics of the biotech space, and they're usually supported by quite a large team of other specialists and consultants and people who really understand that market. To a lesser extent, same case as technology. Here you've got someone who was basically made their name as a big, large cap stock picker, suddenly going into an area which is really highly specialist. Did he have any kind of prior track record in something like biotech or small cap tech stocks, or was it just a case that he'd been so successful he thought, how hard could it be? I can just get any market I touch, I can apply the same rules and I'll make money in it.
Yeah, I think it's probably what you've just said. Actually, yeah, I think actually he did think I've been so successful doing what I've been doing for so long. How difficult can it be to replicate that success in a kind of a new area? And you're absolutely right. I think when you do speak to people that specialize in kind of biotech and life sciences and other companies that are very focused and very niche, yeah, they are absolutely supported by a very strong research team who knows that sector inside out and kind of has the and have the credentials and the research capabilities to kind of spot good companies and ask the right questions. I think actually I remember speaking to somebody about this, and they're saying, look, to invest in some of these biotech companies, you need people with PhDs and kind of specialist degrees and kind of knowledge in this area. But there was none of that kind of at Woodford's new firm. Again, he was supported by I don't want to say sort of generalist team, but this was a team that largely followed him from Invesco. These were salespeople and people that worked with him for years, that walked out the door with him, who had no prior knowledge or experience investing in this new area. So you're absolutely right. I think he thought, yeah, I've done so well up to this point. How difficult can it be to invest in a sector that offers such big rewards as well? I think this was the other thing that life sciences was kind of seen as an area that would offer huge potential returns. I think he just thought maybe I can replicate the success I've had over 25 years. I think actually when he announced the portfolio of his new fund in 2014, there were a lot of companies in there that were kind of traditional blue chip companies, Glaxo and various others that we would have expected to see. There were a couple of companies in there that maybe gave an indication that his new firm would venture into this new area, but I don't think anyone really expected Woodford to venture so heavily into the unquoted. I remember speaking to John Chatford Roberts at Jupiter, so even large city institution who had hundreds of millions of pounds tied up in the fund, who backed Woodford right from the start. I mean, their expectation was that, okay, maybe there'll be a handful of unquoted companies in that fund, but I think by the time they'd left, I mean, it had grown to a number they really hadn't envisaged. So it came as a bit of a surprise to them, the kind of route that Woodford took in the end. And this was a large city investor that really kind of lost confidence in Woodford quite early on. I think it was sort of 2 or 3 years after they'd made the initial investment, they decided to take out large chunks of money from him, because they could see that he was kind of venturing off course and taking a route they didn't really feel comfortable with.
And presumably that if you're a larger fund manager or a larger investor as well, you are concerned if there are more and more illiquid or unquoted stocks. There's a risk management question there as well, because what if you need to get out of that fund for whatever reason? Its liquidity profile has changed. It's not what you expected it to be. And I guess even if he's delivering on the numbers, at the same time, you just don't want to have that much money as a bigger investor tied up in a fund like that.
Yeah, that's absolutely right. I think a lot of these city investors who did pull money from the fund, it all became public knowledge maybe a month, 2 months or so after they'd made the withdrawal, because again their concern is that they got such a large amount of money in a fund like Woodford's, who's got such a big retail following. If anyone gets wind that they are pulling such huge sums of money from that fund, again you're going to spook all the retail investors and think, okay, why is this large institutional investor pulling loads of money from this fund manager that's been delivering for so long? Maybe there's concern that maybe we should pull our money as well. And that was something that maybe we can talk about, kind of the spiral, kind of death spiral for the Woodford Fund later on. But yeah, these were large city firms that were pulling chunks of money, tens of millions of pounds at a time from the fund, because they were concerned about, yeah, as you say, liquidity management. So if the fund reaches a crunch point where it's unable to pay back investors, they didn't want to be in a position that unfortunately, 300,000 retail investors are in now, where the fund is locked and they can't access their money. So a lot of the city investors saw the writing on the wall essentially, and got out pretty early on and had the kind of advantage, I suppose, in that sense, over the retail segment.
This is sort of symptomatic. I mean, I've seen this happen again and again and again. The symptomatic of the star fund manager, where you have a single individual who is considered to be, the ace, the ace stock picker marketing teams build a sort of legendary status around this. You've already mentioned Warren Buffett, but Warren Buffett does continue to deliver consistently, and he has other people around him as well, of course. Do you think that the Woodford, what's happened with Woodford, is kind of another nail in the coffin of this single manager cult within fund management, and that more and more firms are trying to move away from this and have at least two people, if not more, responsible for funds? Because I can see with many of the, like in the listed investment trust sector, frequently you see there are at least two managers responsible for the portfolio. So you can't say the success of the fund is just based around one individual. Do you think we'll see fewer of these kind of stories going forward?
I think so. I think you're right. I think it probably is another nail in the coffin of the kind of star manager cult, if you like. I think it was on its way out initially before this all happened. Anyway, I think if you go back to somebody like Bill Gross at PIMCO, when he left PIMCO, again a huge flood of money left the firm with him. So it was kind of it was seen as a key man. He was a key man risk essentially. He left the firm. He was responsible for pulling in billions of dollars into the flagship fund he managed there. He leaves, and then all that money kind of flows out the door with him. I think that was kind of the first indication that actually people start to take notice and think, okay, well, if we have star managers, then maybe we need to manage this risk a bit better. I think we had another similar situation here in the UK when Richard Buxton, he left Schroders, again seen as a staffer manager at the Schroders. That fund that he managed again suffered heavy withdrawals when he left. I think that was kind of another indication that maybe the staff fund manager culture in the UK was on its way out. But I think you're absolutely right. I think firms now certainly keen to emphasise teams rather than individuals, and I think you get that a lot internally with firms. Whenever you speak to asset managers, they're keen to talk about the culture of their firm, and it's not about one person. It's about the entirety of the firm, the teams that work within the firm, the investment teams, the risk and compliance function, the support around the fund manager, the analysts, everyone else. So I think there are the lessons that asset managers have learned from this is to not place too much focus when it comes to marketing products on individuals, but certainly focus on the teams rather than key people. It's one of the things that Hargreaves Lansdown have also learned from. I think they've realised actually they overhauled their research process as a result of all this. One of the things they have now put into place is they will place more emphasis on media coverage of certain managers. So maybe naively, they didn't expect Woodford to fall as quickly as he did. They didn't probably anticipate a lot of the media coverage that he would get. It seems incredible in hindsight. Obviously, he received an incredible amount of media coverage during his downfall, but I don't think they fully appreciated how that would play into the withdrawals and how it would affect the kind of the perception of the fund manager. So I know that they have implemented various changes across their research process, and I think the kind of media profile of individuals is also now taken into account as well. Having said that, I've just said we're moving away from this star culture. There are examples where there are still managers who are kind of key individuals who certainly still command a huge retail following. So, big example here in the UK at the moment is Terry Smith. He is someone who is he's the best-selling fund manager here in the UK. He has a huge following of retail investors. Continues to pull in huge sums of money. He gains a lot of attention as well for his commentary. He's someone who's very outspoken, not afraid to air his views. But I think he's kind of wary of kind of going down the same road as Woodford, not in terms of performance, but I think he's starting to talk a bit more about succession planning, who within Fundsmith may replace him eventually. So he's sort of giving indications to investors that it's not all about me, Terry Smith. I have a team of people working here with me who are ready to kind of take over when I retire, whenever that might be, and I can pass on the baton when I need to. So there's kind of support in place when that needs to happen.
So basically, there was a stampede. The stampede starts. More and more money gets redeemed out of the Woodford Fund, and then eventually you end up in a situation where they've had to suspend the fund, and there's lots of money still sitting in the fund, lots of private investors waiting for their money to come back to them. Presumably, someone is still trying to sell some of the assets that are still tied up in the fund. Do you think that it will ever be sort of fully liquidated, or just the last ones out the door, including many smaller investors, are just going to have to take the hit on this?
Yeah, I mean, that's a very good question. I mean, this is nearly 3 years on now since the fund was suspended, and yeah, investors are still waiting for final, or the final payments, if you like, from Link, who are, just for those who aren't aware, who Link are. So they are what is known as the authorized corporate director of Woodford's equity income fund. So they're the kind of body that oversaw the fund and were meant to ensure that Woodford was sticking to the rules and was following compliance, etc. And that was Link actually were the regulated, or the body that was answerable to the FCA. So that's one point to just make clear. And also, it was Link's decision back in 2019 to suspend the fund. So any investors who had money with Woodford would have been contacted by Link with notification that the fund was being suspended. 6 months later, in October 2019, they made that decision to close the fund because they felt that Woodford hadn't positioned it well enough to reopen. So yeah, so just if I just go back a little bit, just to explain that point as well, I think that's pretty important. When the fund was suspended in 2019, it was prompted really because one of his large investors, Kent County Council, his only sort of pension client, if you like, had about £250 million tied up in the fund. They've been having meetings with Woodford for several months in the run up to June 2019 about concerns they were having with performance, etc. But they decided they'd had enough and they wanted their £250 million back. Now, it was seen that would be a huge sum of money to redeem in one go, and that the fund had to reposition itself to more liquid companies in order to raise money to pay back Kent County Council that money. So the fund was suspended in June 2019, and the kind of process was begun then that Woodford would reposition his portfolio. He would sell down some of those less liquid holdings and buy more kind of stock, if you like, in the big blue chip or FTSE 100 companies, highly liquid, meaning that shares could be bought and sold relatively easily and quickly. Now, that was initially the initial suspension period was for 28 days. That was then pushed down the road another 28 days. It carried on and on and on. And it got to October 2019, and Woodford was due to give a presentation to Link to update them on the progress he'd made on selling down his liquid holdings and positioning a portfolio to large companies. He went along to the meeting and was never given the opportunity to present his case about why the fund should reopen and what the position would be if the fund were to lift the suspension. So Link just decided they'd had enough. There wasn't really any kind of merit in reopening the fund, and decided it was in the best interests of investors to just wind up the fund completely, and then pay out all the money to those who are still in there. So I think it's also important at this point to mention that not everyone in the Woodford fund wanted it to be liquidated. There would have been people in that fund who would have been happy to see it reopen. And indeed, Woodford had a few roadshows planned for the November and December of 2019 to go out and sort of publicly market the fund when it reopened. I think there's an expectation or an estimate in the market somewhere that there may have been about 600, 700 million pounds left in that fund if it were to reopen. I mean, obviously investors would have walked out of the door, but not everyone would have walked out of the door. There would have been people that would have stuck with him. But the big question is, what if Woodford were allowed to reopen that fund? Would the walkout have been as huge as people were anticipating, and would he have managed to turn things around? We'll never know. But yeah, even to this day, 3 years on, we are still waiting for final payments to be made to investors. Also importantly, we're still waiting for the FCA to finalise or comment on the investigation that they kickstarted back in 2019 which looks into the situation and the circumstances regarding fund suspension as well. So there are still a lot of questions to be answered. Investors are wondering, A, when they're going to get their money back, but also when the FCA are going to announce any progress they've made on this investigation and provide some answers, I suppose, to what happened and some of the lessons that can be learned from all this.
I don't want to put you on the spot, but why do you think have you got any theories about why it's taking so long for the regulator to come back to us on this?
It's a good question, and one I've asked people that know far more about this kind of process than I do. And I've spoken to various lawyers who used to work at the FCA and are kind of involved in the process of these kind of negotiations. Essentially, it's something we covered actually on Financial News. But essentially, it's a very long process. So the FCA provided an update towards the end of last year, saying that it was making good progress on the investigation. It had gathered all the evidence it had needed. It had spoken to people it had needed to speak to, both from Woodford's end, but also from Link's end, but also other parties involved in the management of the fund and suspension, etc. And they gathered all the evidence. But putting everything together, they need to finalise a report. That report has to get then sent to the individual parties involved. The individual parties then have to make comments on that and send that back to the FCA. There's also a chance for them to make oral representations or arguments, if you like, in response to the report. So in a nutshell, the whole thing can take, from even the final report, can take another 3 years. So I think if people were expecting the update from the FCA before Christmas, that we're making good progress and we look like we've interviewed everyone we've said we'll interview and we're on track to come to a conclusion on this. If people are hoping that this will be wrapped up within a few months, I think they're going to be very disappointed. It could be at least another year, 2 years, maybe even more, before the whole thing gets sorted from the FCA side. So it's a very long and drawn out process, unfortunately, and one that doesn't really make the situation any easier for thousands of investors who are still locked in that fund. A lot of ordinary people who had money in that fund for buying houses or weddings and holidays and home improvements, all the kind of stuff that you take for granted. You can get your money back from a fund by just dipping into it. I think the expectation was that we'll put our money in the fund, it would be a bit like an ATM. We can get the money back at the drop of a hat. I think a lot of people have been severely burned by all this, and it's been a very nasty experience.
And just finally, the $64,000 question, Woodford himself, what's he doing now, and should he be allowed to set up some kind of a successor fund group?
Woodford made this shock announcement back in February last year. So he gave an interview to the Sunday Telegraph where he said he was making this comeback, this very bold, audacious comeback, which I think it got a lot of investors' backs up, because clearly, people are it's a very raw emotion still from people that had money in this fund. People had lost a lot of money, and I think people think he shouldn't be allowed to even return to any career in fund management so soon, or ever again, for that matter. So he made this announcement that he was looking to set up a new venture based in Jersey. It would target only professional investors. It wouldn't be looking to run any money for retail investors. Now, this was something that got the regulators, got them interested, because this was news to them. They kind of responded to this article saying, well, he wants to set up an entity in Jersey. Well, he hasn't got the regulatory permissions to do so, and we haven't received any applications from Woodford to do so. And they kind of reminded him in sort of a roundabout way that in order to have a business in Jersey, he needs the authorizations to do so. And I think the FCA also came out and said that if he was looking to run money, he would also need the relevant permissions from the UK regulator as well. So I think the regulators weren't too impressed with his comeback announcement in the newspapers. I think they would have liked a bit of a heads up, or some kind of request from them that he had the permissions to do so before going out and making such a bold statement. But whether he should be allowed to do so, that's certainly a question that gets asked a lot. I think, there are certainly a lot of investors who are are of the mindset he should go nowhere. He should not be allowed to run any money whatsoever, whether it's retail money, whether it's institutional money. His career should be over, essentially, is what they think. obviously there must be people out there who are willing to give Woodford money for him to have this expectation that he can go and launch a new business. I mean, he's working quite closely with a firm called Acacia Research based out in the US. I think he's advising them or consulting with them. So he obviously has income coming from somewhere that he's able to support a small team. He set up a new business, Woodford Capital Management, which is based out in Marlow in Buckinghamshire. So he's got an office based out there. Again, it comes down to this FCA investigation. I think if once we have a clear indication what the regulator thinks about what was it, how he was involved in the fund suspension and his role in that, maybe he won't be allowed to run money or given the chance to, because he won't get the regulatory permission to do so. And that might be the kind of career end decider for him. But personally, I think his career, certainly in retail fund management, is over. I can't imagine anyone would give him money to run. I think the only chance he really has is, maybe he's got large institutional investors who see something in him. Whether he works with them on a consulting basis or not, or runs money for them, I don't know. But I think that's the avenue I can see that he will have any sign of success, any potential success, is going down the institutional route. I know that he's been sort of touting investors in the Middle East and trips to China, etc., to try and drum up interest for his new business. So I think maybe he's even going further afield than the UK as well to try and get some money to run. But certainly here in the UK, it's going to be a very difficult challenge for him.
Well, we'll have to wait developments then from the FCA, because obviously this story hasn't entirely played out yet. Thank you very much indeed for coming on the podcast this afternoon, David. That's been really informative. And just as a reminder, if you want to find out more about the Neil Woodford saga, there is David's book, which is out, When the Fun Stops, which goes into it in a lot more detail than we've been able to do on the podcast. But thank you again, David, for coming on today.
Thanks so much for having me. Appreciate it.
You've been listening to the Armchair Trader podcast. Make sure you visit our website, www.thearmchairtrader.com, for your daily dose of financial markets news and sign up to our free newsletter there.